Welcome everyone, this is Scramble from Emotionless Crypto Trading. Here we go with the first video for 2019 about cryptos and stuff. Right here with a BTC, let's see how we're getting established. That's one of the biggest questions because we have a triangle right now and the breakout is going to happen. So we have to see what are the potential reactions after that breakout. This is the most important thing because this thing can be traded and that trading is going to help us make money, right? So what we're doing during this videos is helping you to read the data that is presented in the price analysis on the technical side and share with you, kind of make it a language that is understandable and readable even for the ones that are not having the experience of the technical analysis, right? So that is all about what we're going to do today. And of course, a couple of other news that are going to be checked over the space, most important details of early January 2019. Let's see what we have to speak about Bitcoin. 132 billion, 133 billion market cap is kind of where we're heading towards right now. There's nothing special going on in the last days, just a slightly higher volume than the average. It's $17.2 billion, but still there is nothing as specific representing a special element from the technical perspective. Even though we used to have an increase over the last 7 days, that can be understood from the price graph as well from coinmarketcap.com. If you take a look, there's a lot of the coins which tended to increase in the last 7 days. That is true. During the New Year's Eve and all this period, we were doing nicely. But attention, we were in a range or in a zone that didn't represented any specific highly meaningful movement on the technical side, right? So in order to have such a movement, we need to touch important price points, meaningful price points, and break out of those, consolidate, get supported, and continue the road. That is how I'm visioning a movement that is healthy for the entire space, and not these highly volatility days, which are perfect for day trading, that's right, but for the long run, this is not what we're searching, right? So the BTC dominance have decreased, and like I said, during the last 7 days, especially New Year's Eve and the day after, 1st of January, 2nd, and so on, alts have increased in their capacity. Now, one of the things that I've been able to see in the last days, of course, such as the Ethereum taking the first place of the altcoins, and it's ranked #1 between the alts, having the ability to fight over Ripple, which is sitting at $14.6 billion against Ethereum 16.4, considering there's gonna be a hard fork in January. Constantinople. Great. Let's get to the technical side. Right here we have charts, 30-minute candlestick BTC paired up with US dollar Bitfinex exchange. What we have here is a short-term representation, great for day trading and little swing trading for 24-48 hours. 30-minute guide here. What happens is we have a specific triangle which is marked with green lines. The upper side of the triangle is the resistance line and the lower side of the triangle is the support line. Here we have the ending point basically, so a breakout is going to happen. Now the big question is how is going to react after the breakout. What we can see is, specifically on this chart, is there's different support and resistance lines which are helping us to get supported or to get rejected. Depends where we're looking at. For example, we have this blue lines going on right here. For example, the one that is appearing right here, it's pretty much touching $4,000 and it was supporting us for the last hours quite well. If we break below that, we have another detail right here during this period, 3,838. This is specifically for the 30-minute candlestick, right? So in that case scenario, we also have to break below the support line of the triangle, which is pretty much a double support area, which is located over here. And that way is going to be way more powerful. That's one thing to consider. If we continue going down, you should expect support at 3,700, great for trending, entering on long. All these positions which are representing support, what you can do is wait for the market to touch it, see if it's getting a breakout or if it's confirming on supporting. Either way you can trade it. If it's confirming on the support, then you entry and you go for long. If it's breaking below, what you can do is you can short the market. That's all. That's the way it works. On the other side, we have the downtrending, the green line, the downtrending resistance line of the triangle. And of course, there is one line here which I didn't mark for now, but this one reacts as a resistance, 4,077, around 4,100 bucks. There is resistance appearing already. And this one confirmed a couple of times before, quite aggressively and very powerful in my opinion, especially here and over here. You can see that the resistance appeared after a very powerful movement upward, right? You see that long candlestick, which increased the FOMO of people, but when the resistance came in, it pushed down, right? So the bears were more powerful than the entire FOMO and everything that long candlestick had the ability to build in the psychology of the humans. Because the reactions of the market needs to be understood, needs to be read from the psychology of a human being. And the way that plays out is you have to see what kind of reactions is going to trigger a specific situation. So if you see the situation, you have to see what kind of reactions is that going to trigger. If you understand this process, and if you know how the human being is thinking, then you know how to react, because you do the opposite. If you do as the way they do, you're going to lose with them. We've got more than 90% of people losing money on long term in trading crypto. We're talking about at least 6 months. If they do it actively, they lose money because you have to prepare for this. It's like, knowing a skill set, a specific, business, like a business. You have to handle it that way. Otherwise, it's not going to work. Great. So what happens here is we did try once again. That period you're looking at right now, I'm just marking it. That increase and retesting of the 4,100 resistance line, that thing right there, is the second try that came in from the ones still believing that the market is going to have the ability to break out of that. And of course it failed, so the way it ended up is a very aggressive markdown of the market. Swing low, push. It did represent a percentage of 6.7, which isn't small at all. And of course, after we were just consolidating a little bit, but still the downtrend was very, very active till the point that reached the bottom of the triangle. One of the things that we have over here is once again support from the bottom of the triangle, because we do have double support in this area. 3,838 appears to come in as a support from previous structures. You can see that. And of course the green line is appearing as well to support us. Now, this is the current situation for the 30-minute candlestick. There's nothing special going on because we're still within the same structure since 25th right here. This is the start of the structure. From here, we just developed in a single way. Great. 2-hour candlesticks are talking to us pretty much a little bit different. That means we have a $4,000 support zone in this case. This one, the one I'm marking right now, this blue area is the support zone we're talking about. So that one, that's the way it's activating and reacting right now, which is great for us. But what happens if we break below that? Then of course the battle is going to be between $2,000 and $4,000. That's going to be the range we have movements, right? So what we could expect is, of course, support from the 3,200 in case you're breaking out of all the supports that you have and you're going to touch 3,200. You can think about a long, because a reversal could come in, a little recovery at least, but then the battle could continue down basically, and the prices could crash in lower to lower levels. Now this is going to happen in the case scenario where the 3,700 support line right here is not going to have the ability to support a structure that's been activating since 25th of December 2018. Right, so that's basically where we are. Now, I wouldn't get too much enthusiastic if we break out of this triangle on the upper side, other than just, having a quick day trade for longing. If there is enough volume, of course, and if the bearish appearance is not happening, then that way I would definitely think about a long. However, I'm pretty much afraid of the 4,400 level right there. You can see that, which is kind of the top of our structure for the second time right here, and for the first time over here as well. Could be for the second time over here and then the third time here. So we have 3 tops. We did try 3 times to break out of this level during the structure, and we were never been able. Right? So the limits of this structure are looking something like this. Where are we right now? Let's just put it in a triangle. Maybe it's going to look better. Like this. Where are we right now? Kinda slightly above the middle of the triangle if we would have to measure. Right, probably the middle would be somewhere here. Just like that. Something like this. This is the place for the middle of the triangle. That's the place, actually, for the neutral range. But right now we're a little bit above. Now, this gives us space and ability to increase more, even though we might break out of this triangle in a positive way, which means at the top. It doesn't mean that we're going very, very nicely on the bullish way. Because what happens is, take a look at that. You break out of the triangle, which is kind of looking like this. So let's assume you break out of it, right? Just follow me. Keep consolidating, and you're going to retest this level. In case that you're going to break out, volume picks up. This is what we need in order for the market to have a bull run 2019. You see that? It's going to establish a new support line, a longer term support line with the previous bottom. This is the case scenario, the probability for the market to transform its situation in a bullish one. Until this kind of thing is not going to happen, I'm not bullish in the market because I have no reasons for that to go bullish long term. I might be bullish for 10 minutes, for an hour, for 5 hours, or for a day. But that is day trading. Attention. Can be bullish for day trading, for swing trading, for long-term trading. Depends what is your purpose. It is not the same at all. Different categories, different purposes, different goals, and different strategies that you have to apply when you decide to research, study, understand, and react. That's pretty much all about this video, guys. There's one little thing right here, which is not that little, but it is very important. Big bankers say cryptocurrencies do not pose a threat to global financial stability, as we already knew it. The Financial Stability Board, a global governmental body with over 20 member countries, has ruled that virtual currencies are not a threat to the world economy. The assessment could have an impact on India, whose central bank is part of the board. We already knew that cryptocurrencies are not posing a threat. They're not intended to pose a threat and to create instability at all. They're just looking to transform the financial system into the digital era. As a lot of things nowadays are getting into the digital era, then that's how the money is going to be from paper into digital as well. This is going to take decades for the entire thing to be completed, and we already know this. What that means is just, great news that someone is coming out and confirming this. But behind the story, behind the scene, we already knew this. Otherwise, they wouldn't let this thing to be approved. They wouldn't let this thing to be allowed to be thrown on the market. Big companies, big exchanges wouldn't deal with cryptos if it would be a threat to the entire global financial stability, right? So it makes sense quite easily. There's no point for them to deal with it, and they never dealt with anything which didn't help them, right? So attention, cryptocurrencies is just helping the bankers right now. Tesla and other Nasdaq stocks to be tokenized on Ethereum are set to boost crypto exposure in 2019. Great news out there. That's pretty much all about today's video presentation. We're gonna get back to you guys with other videos as well during the next days. 2019 is gonna be a year where we should consolidate at a way higher level. Now, there's one question that I'm gonna leave in the air at the end of this video. Are we gonna have one more crash before the market starts for final recovery, or we are already in the final recovery that we're waiting for a while, right? So did we enter in the recovery phase already, or do we have to take another crash and the last one, which is the end of the capitulation phase? This is the big question out there. This is something I'm looking to find out more details and collect information. But for now, I don't have anything telling me that finally we're out of the bearish environment that includes months of a period of time. There's nothing telling me this. Right? So thank you so much. Feel free to hit that subscribe button, like button, share your opinion in the comments area, click the bell button after you subscribe to get notifications from YouTube whenever I'm posting, and let's keep in touch for 2019. We gotta become billionaires. Talk to you soon. Have a nice day.